Morning all, how are you all doing? So I'm just checking my everything's in the right place this morning because I moved stuff around on my screen and I can't work out whether everything's in the right place or not. It doesn't seem like my browser window's in the right place, but maybe it is. Yeah, no, that's right. Okay, how are we doing? Morning Mumo, morning Ro. You two have crown number 1 and number 2 this morning because you are first here. Well done. Right, so this morning we're going to go through the normal stuff, go through the news, go through what's happened over the weekend, which actually isn't an awful lot. Very quiet on the Trump front at the moment. Very quiet. He's not really saying anything at all. So that's South Korean. Exciting. Yeah, so very, very quiet over the weekend. Trump-wise, the only news we had is that he's going to talk to President Xi over this coming week. But apart from that, really not an awful lot. We had the announcement that the steel tariffs going up on the 31st, which was, when was the 31st? That was Friday, wasn't it? I think the steel tariffs came out Saturday morning, but we knew about it on Friday. So yeah, very, very quiet weekend, which is nice. Morning, Gregors. How comes you've got to number 1 spot now? There's 3 people spoken, and you're now in number 1 spot. Interesting. Good little game, this, isn't it? This community thing. Right. So we'll start off with the news. Actually, let's have a quick look at the indices first off, just to see what's happened. So we are pushing up at the open. We've got 2.5 minutes left on this 5-minute candle. So decent ranges going in by the looks of things this morning. 1868. So yeah, going to get trades on the FTSE. Looks like we get a trade on the DAX as well. Yeah. So will be a trade on both this morning. We'll see where we go. Markets ever so slightly opened down on Friday's close. So we may run up and do the gap fill, but we'll see where we go. Good day on Friday. I closed out 12.50. Could have actually got a lot more on Friday, but I just wanted to get it shut. So passed my evaluation with FTMO on Friday as well with the ORBEA. So that's all done. So yeah, want to try and get rid of this. So over the next 2 weeks, my focus is to have a green week followed by a green week. And that will give me non-stop green days followed by non-stop green weeks. That'd be good, wouldn't it? So I want to get rid of that. It's annoying me. I don't like red. So yeah, we'll see where we go. 1.5 minutes to the candle. So we whiz over the news first, then we'll come back and have a look at what's happened at the open. So morning, everybody else that's just arrived. Virginia, Monkey, Paul, Nav, how we doing? So today is Monday. FOMC Waller speaking at 1 a.m. Obviously, that's already happened. Didn't say anything exciting because there's nothing in the news that's red. So this week's PMIs and non-farm payroll. So it's PMIs basically this afternoon, manufacturing. We've got Powell speaking later, not expecting anything groundbreaking out of him. We've got CPI for the Swiss franc tomorrow. This is going to be an interesting one because the last CPI number we had was 0, which was not expected. So as you can see, the actual inflation figure in the Swiss has gone basically flat, totally flat. They're expecting it to pick up. Well, they keep expecting it to pick up, and it doesn't. Now they're expecting it to pick up again this time round. So if it doesn't this time round, I think pretty much guaranteed that they're going to drop that interest rate back to 0. We're sitting at 0.25% at the moment, lowest out there. And I don't think there's any reason why they won't go back to 0. So 3 monthly CPI numbers in a row, basically, that are either negative or 0 is basically recession. 0 is obviously not recession. Minus 0.1 would be recession, technically. But the fact that your economy is not growing means you need to stimulate it. The way you stimulate it is by reducing interest rates to drive up business and borrowing, basically. So, yeah, interest rates up, down rather, would mean weak Swiss franc. So that's going to be a key figure that comes out tomorrow morning. We could get some pretty big movement off that Swissy. So we need to watch out for that. Oeda speaking tomorrow morning, always does, basically. So we'll see what happens there. We've got CPI estimates for Euro, which don't tend to do an awful lot. We've got GDP for the Aussie this week. It's non-farm employment, obviously. The overnight rate for the CAD is coming out, so we're expecting that to drop. I don't see any reason why we shouldn't. There is obviously the tariff thing hanging over Canada. Anything happens in the next 48 hours to do with Canadian tariffs, that might change. But at the moment, they're looking to drop the rates, which is good. We've got services PMI, which is obviously the partner for manufacturing, which is coming out today. And then the press conference, which will give us the forward guidance to which way the CAD's going to go over the next quarter. We've then got the euro rate. The euro rate, again, is dropping. So, again, weakness in the euro potentially. Lagarde, very straightforward with everything. They are going to keep dropping that interest rate until they get below 2. So that's the plan. And that's what they're doing. So it's working perfectly for the Eurozone at the moment. So we shouldn't get too much volatility off of this unless something comes out in the press conference, which is obviously going to change their forward guidance, which is continuous drops. So the thing that may happen this time round, which Lagarde may do, is say that, right, we are very close to that 2%. What we're probably going to do now is pause. So the way that they've been doing their interest rates is to drop, pause, drop, pause, drop, pause, drop, pause. So you have 1 month drop, 1 month pause, evaluate, 1 month drop, 1 month pause. If it keeps going the right way, you keep doing the same thing. So that's what they have been planning to do. And it's working pretty well, basically. So they've been on a standard, so that's what they are planning to do. So what they've been doing is dropping every time. What they're planning to do at some point coming up, which we thought was probably going to be this one, but it isn't, is going to pause, drop, pause, drop. So at the moment, this one here could potentially be the last one for a quarter, meaning that we are going to sort of stabilize maybe a little bit on the euro, but we'll have to wait and see. So Lagarde talking is when we're going to find out all that information. CAD unemployment, and then we've got non-farm payroll, which is basically the unemployment rate for the US on Friday. So busy week, lots and lots of news, lots of interest rates, CPI numbers, GDP, the lot. So it's going to be a nice volatile one, hopefully, this week. Have I got the NAS up? Ooh, too close. Oh, that's annoying. It's too close to the open on the FTSE. DAX managed to get a trade on, though. Spread must have just been too high to get in on that. So yeah, triggered long on the DAX. Didn't quite get the trade on the FTSE. Trouble with the FTSE is the spread is so wide. So when you close right high at the top there, if that spread is too big, the EA won't take a trade because it will basically run the risk of getting a limit order on. So didn't get a trade on the FTSE. Doesn't look like it's a bad thing either way. So pulling back at the moment from those highs. So we'll see where we go with those two this morning. So there's your news that's coming up this week. It's a busy week, so potential volatility all over the place. We've got Trump talking at some point this week to China. So obviously that is potentially going to go really well or really bad. If it goes really bad, he's going to come off the phone and say something stupid, which is going to send the dollar and the stock markets into freefall or into an explosion. So just be aware of that. It's forecast potentially for, I think, Wednesday, Thursday this week. A little bit open at the moment, but just be aware that is happening. So, ahead of that, if you've got profit, it's probably worth taking it just in case it does go crazy. But anyway, we'll see. So that's this week's news, all done. We'll go over to FX and have a look at what's going on with the ADRs and everything. Didn't bank anything on Friday. Last month was okay. Did 5% odd last month, so not amazing, not terrible. But the market's very, very sideways, so obviously it's hard to make money in a sideways market. So far today, the pound US dollar is the only thing that's moved. So we've had some decent upside movement on pound US, which is basically weak US dollar. So market opening straight into a negative US today. So ADR hit to the upside. Just about to get another trade on my pound US shorts. Oh, right on my short line. And it's in propulsion. Toying with the idea of taking just taking a manual on that. It's a little bit close, but it's not really. I'm thinking hard about this one, you can tell. I'm going to let the EA take care of that for the minute and see if we get an entry on it. It is. I just want to see how far above ADR this goes. So there's your ADR hit today. So you can drop down low time frame, wait for a reversal alert, which is going to be there for an entry. Obviously, if it pushes further, we're going to get potentially a reversal higher up. But it's nicely extended across the board. Look, not quite on the hourly though. But anyway, so there's a new entry potentially going in on the pound US dollar today. So that's your only ADR. Why has Aussie CAD not got an ADR number? Weird. No data loaded on that this morning. So there's nothing obviously on the weekly. It's the beginning of the month, so there's nothing to look at on ADR or AWR. RSI extensions, you've got US dollar CAD at the moment, so that's obviously come down quite hard. That's coming straight into the monthly low. So this is last month's low. Was last month's low. New Zealand dollar, US dollar, that dollar's in trouble this morning. So you're coming straight down on US dollar CAD into that monthly low. So we may well get a double bottom here and then a quick bounce up into one of these propulsion gaps to the upside. But as we know, dollar is under massive pressure at the moment. Trump's absolutely screwed it. So buying the dollar at the moment at the best of times is tricky. So but you have got a monthly low coming up. Obviously, look at the previous month. Yeah, you're likely to get a bounce off of it because there will be limit orders ready to buy last month's low. Whether or not there's enough limit orders there to drive it through or whether it collapses, you'll have to wait and see. But it's coming up to a lovely area. So you've got an RSI extension on the hourly there, RSI extension on the 4 hourly. That's down below just getting to the 20 level as well. Yeah. So when we get down to this sort of area, it's very unusual not to get some kind of bounce out of this area. So although it is coming down very hard this morning, but drop down low time frame, wait for a signal. Reversal alert will be there. Yeah, so just coming down into that monthly liquidity. And then obviously see if you get a bounce. Try and play a bounce play out of it if you want to. If that doesn't hold, you're looking at coming back down and retesting these lows potentially. So you got sort of 3 ADR roughly to the downside if you're position trading it. Unlikely to get a drop like that unless Trump says something silly about China. But looks like a good bounce play opportunity on that one. And you've got the pound CAD as well, which is obviously on the 4 hour. That's already played out. You've missed it. Yeah, missed it. So that was your 4 hour alert there. That's already gone. So you can't trade that one. You could have traded it on Friday. In fact, the alert on that has actually only just gone in. So you would have only just had an alert. So you would actually be getting in long now on the 15-minute time frame. 5 minute, you probably would have had an alert earlier. Yeah, Friday you got the alert on that one on the 5 minute time frame. But there's nothing else really set up from an RSI perspective or an ADR perspective at the moment. So I'm going to whiz through the pairs this morning and have a look at everything. My exposure is pretty good at the minute. I'm exposed on everything with those 4 positions on. I'm just struggling to bank at the moment, as you can see, because the market is just doing that sideways, sideways, sideways. So when the market's going sideways, it's very hard to bank, obviously, because you know, I need a good ADR's worth of movement. When you're sitting around doing this, it takes a week to get a trade banked at the minute. So it's just like hard work. But we'll go through all the pairs this morning, have a look at where everything is, see if there's any bounce play opportunities coming up that we can take. Yeah, see where we go from there. Right, let's have a look at the indices. So 10-minute ORB or 15-minute ORB. So that's your 10-15 minute range on the DAX. That is your 10-15 minute range on the FTSE, because we are just inside bars on the initial range at the moment. So we'll be breaking long or short on that if the market goes anywhere. But at the moment, it's not going anywhere. We're stuck. So upside targets for breakout to the upside. Looking for a retest of propulsion for upside target, which is 2R. Got to be careful of that. I mean, that's actually your high, but that's really your high from Thursday. Friday's high was pretty much at the close. So if we break long, you've got some resistance potentially at these 2 daily highs. Failing that, you're going to come up and test this area, which is that propulsion gap. So that's good for an upside target. Downside target is perfect in propulsion. DAX. Yeah, gap fill. So we still haven't done the gap fill from last week. So if the DAX breaks short, that's an easy target to the downside. In fact, there's an argument for going a little bit further than that, but I'll leave it where it is. So this high here, potentially you might bounce off of that, and they'll class that as the gap filled when you get to there. Other than that, you know, we're coming back down to that close. Upside. Yeah, I mean, that's Friday's high and that's Thursday's high. So there's tons and tons of upside room on this. Question is, at the moment, are we going long or short on indices? And this is still a very big unknown. We don't know whether this is a bull market or a bear market we're heading into. And I don't think anybody really knows at the moment. Market seems to have stalled out, just about to trigger long on the FTSE. There you go, long FTSE. So the market seems to have stalled out at the moment. We're looking at whether or not we're going into a bull or a bear market. There's a lot of consensus in both directions at the moment. I'm personally thinking we are a little bit more bear than bull at the moment, but who knows? I was looking for some kind of guidance last week of breaking this low. We didn't. Friday, we came and tapped it and rejected it. So we've got a double top rejection, which is the start of an M pattern reversal. If we break that low from previous week, i.e. we get through that propulsion gap, that would confirm a bear market for me, which means that we're off and we're coming down. So we'll see what happens. If we break long this week and hold above that high, we're back in a bull market, I think. So we'll have to wait and see. But obviously this can change on a daily basis at the moment with Trump saying stuff. So at the minute, I'm thinking looks bearish. But, you know, so a lot of people saying, yeah, it's definitely bullish. I have seen posts for Bitcoin and everything all over the weekend and last week. People posting charts. It's absolutely obvious. Look at the head and shoulders pattern. It's a bear market. I've got other people posting, look at the 200 MA bounce. It's a bull market. So there is, you look in either direction, someone will be saying that, someone will be saying that. Obviously, nobody knows. Everyone's going to have an opinion, but Trump screwed the economy. Businesses aren't going to be happy. So in an environment where businesses are struggling because of additional costs, first thing to go is people. When people go, unemployment rate goes up. That causes a death spiral, and businesses tend to start to struggle because you can sack all your staff to make more money, but if your staff haven't got jobs, they can't buy your product. No point. So, yeah, looks like, to me, the start of a bear market, but we'll wait and see. This week's going to be critical. Mind you, I said that last week, didn't I? I said last week, this week's going to be critical. And we didn't get any clues last week. So this is what we were looking at the start of the first leg. We were then looking at a pullback and a break below that low. We didn't get it. What we got was a very tight, rangy thing, which tried to get out the highs and failed. So we've had a reversal alert short. So if we do start to go short and we come and test that low and that low breaks, market's going to start to sell off. it's going to go into fear mode and it will just accelerate. So we'll see. One way or the other. Guaranteed. Morning, FTNet. Morning, WazCheck. Morning, it's time, Peter, Chris. Everybody's here. Look, Elevated Trading Hub. Mark, Barry. Morning, Ace. How we doing? Right, so I'm going to go through the FX pairs. And we'll see if there's anything we can get into. DAX and FTSE still sitting around doing very little. Very bullish at the moment, though. Obviously, we've broken long at the open. Bears have tried to push the other way, and bulls have pushed them straight back in. Lovely long wicks to the downside, which is bullish. So it's looking more bullish than bearish at the minute, but I wouldn't say it's particularly strong, obviously, because we've sat around for 20 minutes doing nothing. So this could go either way today. We'll come back and check that on a periodic basis. So looking at where we are at the minute for opportunities, obviously I'll go through the main 7 pairs that I'm trading at the moment. I'm still not really interested in opening up my portfolio to take on all other pairs. I don't want to take on too much more risk at the moment just because of what Trump's doing. I still don't trust him. I don't think anybody not trust him, but trust his decision-making process at the moment, because obviously what he's doing is scaring the market. So the more risk you take on, as soon as there is some clarity in the market will probably start to take off. So the FX pairs will have some kind of direction. We'll go, right, well, that's going to be good for the economy. That's going to be bad for the economy on all the different countries. And all of a sudden things will start to trend, which, because we've had such a long period of stagnation, I suspect there'll be quite strong moves. So I don't want to put too much risk on and get caught offside when the market does actually decide to go. Assuming it does decide to go, we're not far away from coming into summer trading. We haven't gone anywhere this year. So it's very difficult at the minute to pick directional bias, because obviously directional bias is based on what countries are being charged for doing trade with the US. That's basically the way this thing is working at the minute. So at the moment, everything is basically support, resistance, bounce play kind of base that I'm looking at. Any RSI extensions, highly likely to work if you can get them. They're just very few and far between at the moment. So when you have a strategy that relies on mean reversion and your main entry criteria are not being met, you have to adapt. So you can use anything, basically. You can adjust the settings on your RSI, your CCI, your MACD, whatever you're using for mean reversion or for condition monitoring. Or you can just look at basically where price has been and use support resistance bounce. We know where the market's going because we can see where it's been, and that's where it's going to head back to. So it's a case of just deciding on a direction at the end of the day. So we'll whiz through everything, see if there's anything of interest coming up. But RSI, obviously at the moment, there's just so few signals. We're whizzing through every live room, looking at the RSI dash, and there's hardly anything lit up. We're used to it being lovely and lit up and staying lit up, the market getting extended and really stretching and really making money out of it. But it's just not happening at the minute because it's too scared to move. So nice trend on the Aussie New Zealand. You can see I've taken a load of shorts on this, which have all played out. So I went flat last week, flipped long basically on Thursday last week, looking for a push back up on this leg back into propulsion. Haven't got it yet. So I'm long on that. Last month's low is now in, obviously, which is confirmed there, which is this previous resistance and support. So this is what we're holding at the moment, potentially for long. So if we break that down below that, we're heading down into this propulsion gap and then down into that monthly low. If we break up, we're heading for that propulsion gap and potentially coming back up to test that monthly high. But if we're going to continue in this long-term bear market, we shouldn't really be looking for much more than an ADR, 1.5, 1.25 ADR to the upside before we come back down and test the lows. So I'm long on it at the minute. We'll see where we go. Aussie US, can't do anything with it. I've been shorting this over and over and over again and just milking it, but can't do much else with it. This is a very difficult thing to trade at the moment because of this whacking great propulsion gap. This is all US pairs are the same. Are we going to strengthen up on the US or not? No idea. If we do, that's where we're going. If we don't, we're just going to continuously sit here and go, are we going to? Market's just not used to not having a strong dollar ever. Yeah, we've always got a strong dollar, or it's neutral, and it's always pulling back in this, getting ready for its next sign of strength. At the minute, the market just doesn't, I think, know, should we have any faith in this anymore? Is the world going to have any faith in it? No one's got any trade agreements in place. No one's interested in talking to Trump. Everything they say to him, he rejects. You can't do anything at the moment. So why would the dollar be strong? There's no reason for it to be strong. So until something changes, I think we're just going to sit around. And in fact, I'd be more inclined to be selling against the dollar at the minute. But, you know, it's very difficult. So at the moment, your upside resistance is last month. You've got a 2-week high coming up, which is kind of another high there, just sort of in between them. So there's your resistance zone at the moment to the upside. Anything above ADR today is potentially a good short opportunity. Lows, you've got the double bottom from last week. You've got the 3-week low and the monthly low. Yeah, so it's a very, very, very tight range we're in at the moment. So as you can see, that's an ADR. So if you get up into there, try and get an ADR out of it. If you want to buy the lows, try and get an ADR. But assume it's going to stay doing the same thing until it proves you otherwise. When it proves you otherwise, potentially it's coming all the way back down to there. Whether it comes down in a rush or whether it's more orderly, we'll have to wait and see. But, you know, that's assuming it's going to do it. Who's going to buy the dollar at the minute? So anyway, Swiss yen. So that's stuck in the middle of nowhere at the moment. Any attempt on last week's high, previous monthly double top, the month before high. Yeah, all of this area here is lovely resistance above 150 ADR. And to the downside, you've got kind of a triple bottom out propulsion down here. You've got another 3-week low, last week's low, 2-week low, monthly low. Again, this is what the market's doing at the minute. It's just range bound. So look for longs and shorts at highs and lows. And obviously, if they don't work out and it breaks out, that's when you turn it into a position trade and wait for that next leg to come back down again. So it's just trying to find an opportunity really to get in. And this is the trouble at the moment. The market's either moving far too fast into these areas and you don't have any faith in shorting it, or it's not doing anything. So it's very difficult to sort of get into entries and give yourself confidence to get into entries at the moment. So I will be looking for longs down here. And I'll be looking for shorts up at the monthly. So if we get outside of ADR, then I'll start to have a look at where we're going. So it's just a case of keeping your eye on the ADR dash and obviously the RSI dash. This is what they're there for. So if they alert, look at them. If they're at a level of resistance or support or getting close to one and they're extended, that's where your trade opportunity is. But it's not happening very often at the moment. So I'm flat on that. EuroCAD I'm short on. So as you can see, I took one off last week before last. Couldn't do anything last week. So we sat there for 3 days. It went down into profit. My target was down at these lows, and then it came straight back up into drawdown. It didn't give me an opportunity to place that trade back on again because it was too close to this one. And then it collapsed straight back down again, did an A-shaped recovery, and now it's pushing back up again. So I've literally, since I took that profit off week before, I've been sitting basically in a range. Can't do anything with it. Should have taken it off down there, but it wasn't really enough money to take. So I'm still in it. So as you can see, my next entry is up here. So if we do come up and break last week's high and test the previous monthly high, that's where my short is. So this week we've got euro rates. The euro rates are going to drop, which in theory is negative euro. So as long as Lagarde doesn't come out and not change interest rates this week, I can't see any reason why this won't just play out and we'll take the profit at some point. But sideways, can't do anything with it. Euro Swiss, same thing, totally sideways. Longed it there on that RSI extension, got out at 1 ADR, straight in propulsion, double topped. Can't do anything with it at the moment. So there's a potential long opportunity from Friday, but I mean, it's already gone. I've missed it. We've got the Swiss rates this week, meaning that the Swiss will probably, sorry, not the Swiss rates. We've got the Swiss inflation figure this week. If that does come out at 0 again, we're going to have a very negative Swiss, which means this is going to be flying up. but then we're going to drop the rates on the euro. So this one, if we do get up into highs above ADR, or we get an RSI extension on this one, good looking short, definitely. So I'd rather short this than long this at the minute. But either way, shorts are expensive, but I'd rather be sitting short on it than long on it, because obviously the other thing we've got is that Swiss franc safe haven run. So whenever Trump says something, that happens. So, if you're shorting against the Swiss franc, as soon as there's any fear goes into the market, the Swiss franc rallies, which everything shorts against. So, yeah, like the idea of shorts on it, but nothing at the moment. Euro pound, longs on this one. I got out of a partial on this last week. Again, just because it's the second partial I've taken, as you can see, just because since I got in it, we moved down and we haven't gone anywhere. So I'm just stuck at the moment in this. Again, it hit break even on Friday. I've banked on it twice, so I could have just closed that there and walked away and just taken the money. But again, I don't really want to. So what I'd like to see happen this week, in fact, I'm going to place targets. I'm going to place some hard targets in there to get out of this if it achieves it. So this high from 2 weeks ago, that's last week's high. If we break last week's high today, we will probably come and test the previous week's high, because there's, it's within an ADR. There's ADR. There's last week's high. That's that previous week's high as well. So you've got a double weekly high, double top, a propulsion gap. So if we break this area here, that's where it's going to come up and try and test if it doesn't get pushed away from that propulsion move. So I'm going to try and take the whole lot off there ahead of the euro interest rate, because I think there's a good possibility we could drop on that. We've got pound news this week as well. So I'm just sitting around in it. I might as well just get out with a small profit on it at some point. So that's the play this week on it. Obviously, if it drops, it drops. So if the euro collapses down, we'll come and test last month's high, which is 2 ADR away. I'll add another position on, which means I'll be in 4. And then just wait for it to pop back up again at some point. Pound US dollar. So this is obviously rallying this morning on a negative US move. There's 4 positions on this. I've only banked on it once. I had one off there since I got in on that move. Now, this trade was absolutely not what I normally do. Morning, Lucas. So I took a breakout here on fundamentals. So this was a news event that hit, and I was expecting a continuation of it. We didn't get it. It reversed. So I basically added a second. We sat around for 3 days, added the third, stuck inside this range, finally broke out, 4th, 5th, and then started taking a partial. I didn't do any drawdown control on it because, stupidly, I'm still expecting some strength from the US for some reason, because that's what always happens. But anyway, we haven't had it yet. So the average is not great, 225 ADR. When this trade goes in today, I'm just going to stick a sell stop on this. I just want to make sure I get a trade on it. So this sell stop that I've got on here, if this continues to rally and then we get a reversal up here somewhere, obviously I'll take that sell stop off. Actually, I might leave it on because it might actually just get gathered up, but I'll see what happens. But I just want to make sure I get into a trade here. Reason being is I don't want that average creeping away from me. We're down at 225, so taking this additional position here, sorry, wherever we are, yeah, here, is going to get that average up. So I want the average getting a bit closer than 225. Something over 200 ADR away as an average is just a little bit too far for my liking. So just want to try and get that a little bit closer. This propulsion gap is obviously the big downside target at the moment. We've had a pullback into accumulation and then a potential bounce back out again. So you had your reverse alert and your retest there. So potentially this is legging up to try and break the monthly highs. So what I want to do is make sure that I've got another position on here so that that average comes up. So if it does reject that monthly high, we're turning into a multi-weekend pattern reversal back down into there. So I just want to make sure that I get out with this with some profit. But already banked once on it. It's just, a lot of sideways movement and then a day of movement. So it's starting to look like it wants to get back into a rhythm, but not in the direction we would normally expect it to go. But that's because of the US. So yeah, sit there at the minute waiting for that to do something. Oil is stuck. We had a big drop on oil last week on Thursday. The OPEC are going to increase production on oil, which obviously means if you've got more supply out there, demand doesn't change, the price of oil drops. It's gapped up dramatically this morning. So as you can see, gaps get filled. So at the moment, that looks like a beautiful short out of propulsion right now. Yeah, so you've got a lovely accumulation going on today. So if you look at the last this session so far, look at that double bottom low. It's a little pending order under there. Beautiful risk reward trade. But yeah, so there's a nice little short there on oil, basically. Potential for $50 a barrel. Not sure if it's going to hit it, but there is the potential for that. If we keep going on with the way the world is going at the moment. But we'll wait and see. Aussie dollar CAD, I don't really trade oil anyway. So going through the rest of the pair. So that's my focus list gone. Everything that I normally trade, and what I'm in, what I'm not in. So you can see what I've got on there. We'll go through the rest of the pairs. Let's see where we are. Okay, so stopped out DAX long, broken short. Stopped out, obviously, FTSE long, broken short. It's not going anywhere today, so it might be a double stop out today. So propulsion gap just gone into the downside, but obviously it's going to want to retest that. So it looks like it's going to be a double stop out today. So I'll have to try and get the money back this afternoon. We're past the 30-minute range as well. So that's good, isn't it? First day of the month, start with a loser. So yeah, they're going to stop out by the looks of things. So we'll come back to those later. We'll look at that this afternoon. Aussie CAD. So there's basically breakdown on the Aussie CAD within the monthly range. So we've got this big old range formed here. We're just flip-flopping around in here at the minute. Very difficult. At the moment, it's bearish. This would be a lovely area for a buy. You did have a signal on Friday to get in this one long, which obviously has worked out very nicely. In fact, the signal on 15 was this morning. The signal on the 5 was on Friday. So that was your last reversal alert on Friday, and that was when you were extended on the hourly. So that was your signal for a long. Good chance we're going to hit propulsion and drop from here. There's no reason for either of these to be strong or weak at the moment. However, obviously we've got the news coming up this week for the interest rates for the CAD, which is dropping. So there's potential Australian dollar will start to beat the CAD out this week, but we'll see. So the minute, it's always difficult when you've got interest rates coming out, but theoretically, the Canadian should weaken on the interest rate decision. But again, we are still unsure as to what interest rates are going to do at the moment, because this is the first round of real interest rate decisions we've had since Trump's tariffs were introduced. So whether or not the market is paying attention to interest rates at the moment, we'll have to wait and see. They will be paying attention to it in some degree, but whether it's the normal degree, as in that's what drives the market, we don't know yet, do we? So Aussie CAD at the minute is extended to the downside, so it looks like a nice long. But again, all these US and Canadian pairs got that huge downside target, which for me is just impossible to ignore. But how on earth are you going to power up the CAD and the US? This is a very difficult situation from a fundamental perspective to read which way anything's going at the moment with the US and CAD. So downward would make sense, but for the short term, probably more upwards because of the interest rate decision. So we'll see. Nothing particularly exciting there. Aussie dollar Swiss looks like a good long out of the double bottom. So you got this previous monthly low. You got this low here, which is also that low and this low. So this whole area, basically, market keeps buying this level up. It's just bought it up. You've got a reversal alert just gone in. So push up into the highs for that double top weekly. And then you've got another weekly at the highs there. So again, this one can go either way. We've got a nice downside propulsion. We've got a nice upside propulsion within the last 2 weeks. So either up to there or down to there. One of those two. At the moment, there's no signals. The last signal we had on this was a long from back here, which you got roughly an ADR out of in a week. Yes, it's just awful. Sideways motion. But again, interest rates for the Swiss will drop if that inflation figure comes out negative this week. So obviously that is the movement. If the Swiss weakens, Aussie Swiss is going up. Aussie yen, all yen pairs at the moment, very tricky. Again, since the intervention, obviously there is a strong yen. We've got a nice strong yen at the moment, which is nice to see for a change. But short term, obviously, there's not really any advantage. So buying the lows, had a signal on it. You wouldn't have got into that because it was too fast of a move, but there was a signal kind of there on Friday. But last signal we had for a long was there, which would have been a scale in and exit. So yeah, upside target, nice and easy to see. The yen obviously is a safe haven as well, so it will power up and depower as Trump screws everything. Morning, Franco. So yeah, all the yen pairs are pretty much the same, as you can see. They are kind of sitting around at the minute, not really doing a lot. So all of them have pretty much the same pattern, apart from the US dollar yen. So sideways at the moment on these yens. So it doesn't matter, I don't think, which way you trade them. Just try and trade them at a resistance or a support on a weekly level, or wait for an RSI extension. You shouldn't be really getting into too much trouble on them at the moment, obviously, unless something changes fundamentally. US dollar yen's a little bit different because obviously we've got a weak US dollar. As the dollar weakens and fear sinks in, more safe havens get bought. So US dollar yen more likely bearish, assuming that we don't strengthen on the dollar, that is. So yeah, all the yens are the same. There's nothing to look at really at the moment on them, but weekly levels, just watch these weekly levels, and the monthlies, and just look for any kind of reactions at those levels. So reversal alerts, 3-bar reversals, anything that says looks like we might be bouncing here, but wait for it to get there, which at the moment could take days. So CAD Swiss sideways. We've got obviously the interest rates and inflation numbers coming out this week. So could go either way. There's no reason to take a trade on this at the minute. It's bang in the middle of a range. So nothing you can do. There's your high, there's your low, there's you. So up here or down there is where I'll be interested in getting into something. CAD yen we've done. Euro odd. So all the euro pairs, as you can see at the minute, the euro, we had that big old move when Trump said, you've got to start paying for your own wars type thing. We're not going to be backing up Ukraine and potentially NATO. We don't know what's going on, do we, at the moment? But obviously, we had to do a lot of bond purchases in the Eurozone, which drove the euro. However, interest rates are coming down on the euro, which is obviously bearish. So since that move kind of undid itself, we've had really 2.5 weeks of sideways movement on it. Nothing particularly strong, nothing particularly weak. So again, the euro, the same as my euro pound trade that I'm in, sideways at the minute. So with all of these, it's going to depend on what Lagarde says in the press conference this week as to what the future guidance is. I get a feeling she's going to come out and say, this is the last one for the moment. We will see how it goes over the summer, and then we will change interest rates if the data says so. So I've got a feeling this 2.15 that we're moving to this week could well be the kind of norm. Dropping below 2% is on the cards, definitely. But they're trying to stimulate growth, and they're doing a very good job of it by dropping the interest rates. So there's a very good chance, I think, that we might just sit there this week. This next month, and then we'll just kind of grind around up and down on all euro pairs and just to sort of stay sort of fairly rangy. So again, RSI extensions, upside and downside, support resistance bounces, upside, downside, same thing. There's no fundamental advantage for the euro. It's more bearish than bullish from an interest rate perspective. But again, trade tariffs is the king at the moment. So I don't think it's going to make an awful lot of difference. So I'd be looking for shorts potentially at the monthly high. Got a very good monthly high, to be honest. But yeah, I'd much rather be taking shorts at the moment on this. So we'll see where we go. But if you tapped into last week's high at ADR today, just bear in mind, obviously, anything you get into on the euro, you got the interest rate decision coming out, which could skew this completely, and it could fly off in the other direction. But yeah, downside looks much more attractive. Euro yen we've covered. Euro New Zealand is the same as the euro odd. Again, totally sideways. Look, yeah, for 2 months now. Well, for a month, basically. That's that obviously crazy move. But yeah, absolutely sideways. And it's contracting as well. It's getting smaller and smaller and smaller. So market's got no confidence in anything. But I'd be more interested in shorting than longing. So at the minute, look for any kind of retests of this propulsion gap or the monthly high. So 125 to 150 ADR. Good for shorts. Euro US dollar, obviously everything's flying. We've broken out this morning, so everything's beating the dollar at the minute. Probably going to get an ADR on that. Yeah, lovely, isn't it? Flying. So weak US dollar, everything goes up against it. Euro drops the interest rates, euro drops. So this is probably not a bad place to start looking for shorts. With what we've got coming up this week. So if you took an initial entry when you get some kind of extension on the RSI, or we hit ADR today, they'll both probably signal at the same time. You've got an entry here, and then you can scale in up to that monthly, meaning that you're going to just take a pullback on that leg, or probably already pulled back. So that kind of movement. So shorts from there, if it bounces off of there, happy days. If it doesn't, scale in up to the monthly high and out. But yeah, we should see some weakness in the euro this week. So this is pushing nicely today ahead of the news, which should weaken the euro. But obviously, if the US dollar weakens even more because he throws his toys out the pram when he has his call with China, the dollar's going to weaken. So even if the euro is weak, if the dollar weakens more, euro US dollar's going up, isn't it? So again, it's all down to what Trump is doing at the minute. Pound odd, all the pound pairs are again slightly bullish, but very rangy still. Again, the Trump tariffs have thrown everything into complete sideways mode. There's nothing going on in the pound that is strong. There's nothing going on in the pound that's particularly weak. We've just agreed 15 billion in extra defence spending in the UK, or that's the plan. We've got to pay for that. So there could be bond auctions going on in excess, a little bit like there was with the euro. So we might find some strength comes into the pound on that, but again, hasn't happened yet. So other than that, there's no reason for the pound to be bullish or bearish. So all of these pound pairs sitting around, apart from the ones you're trading against the CAD and the US, which are obviously going to move more violently because of the CAD and the US, which is the main things that are on the move at the minute. So yeah, nice push down on Friday. There we've got non-farm payroll this week. Obviously, that could completely undo it. But there was your extension and your signal on Friday. I'm obviously not trading this. I've got the pound on. But yeah, your signal to get long on the 5 minute on Friday was down there. Very nice M pattern reversal. You double bottomed on it this morning. So that was a lovely little trade from there. But yeah, that's, again, going to be driven by Canadian. We've got lots of news on that this week. So we are on a breakout here. So if this is a false breakout, we should come up and then retest the upside. So if this now hits resistance here or here, kind of where we are at the moment, this could be the start of a break back down to come and retest these previous weekly and monthly lows. This propulsion gap here, it's one big propulsion gap basically. So if you take the low of that or the high of that propulsion gap there all the way down to here, that's really one big old propulsion gap. So anywhere in there you see some kind of rejection on a lower time frame, that could well be the start of the high, low, lower high going in. Yeah, so good looking short. Going to need some CAD strength, which means you're going to need some US strength. Pound Swiss, I missed it. So that's 125 New Zealand US. This US dollar's dying today. New Zealand dollar US dollar 125 ADR. We'll get to that one in a minute. So lovely little propulsion gap bounce we had there, and then retest. Came back down and retested it overnight. So we gapped down basically into this area, which was a good little buy. It's already gone. It's actually looking like it's coming back down fairly hard now, actually. Bear in mind, obviously, Swiss franc is likely to weaken with its inflation figures, potentially. I mean, those inflation figures may come out at 0.5%, and it could strengthen the Swiss. But it's not forecast to be amazing, is it? And we've had two bad numbers. Euro US dollar ADR. The US dollar's dying. Stopped out on the FTSE. DAX has held at the moment. But whippy old session today. So yeah, this is nice reverse alert going in, potentially for a pushback up into propulsion. And obviously it's a nice bounce point. So didn't get an extension. Again, there's just not enough strength in the market to drive any indicators into extended conditions. You got this accumulation as pound US dollar 125. Then we broke up into a new one. We're still there. So yeah, it's a lovely buy. If not, if it breaks down, then you'll be scaling in down into this low, in which case you'll probably have 1, 2, maybe 3 positions in. So you'll be looking for a pullback on that leg. So nice looking long, but we have got obviously the news this week for the Swiss. It's just about to give you a reverse alert short as well. If that closes bearish, obviously, that's going to give you a reverse alert short in the next 5 minutes. Mixed signals, sideways. Pound New Zealand, same thing. Like this as a, well, I did like it as a long actually on Friday, but it's broken down. So looks like we're coming back down to retest that weekly, monthly, 2 monthly. So this whole area here is where the buyers are. We did break out of that area there. So this is your first port of call if we do break down. So look for an extension down there, which will be an RSI extension to the downside for a bounce play. If you want to take a breakout, it's now, literally now. It's just retested. So there's your breakout to the downside. Continuation short. If you're a bull, this is where you're buying. New Zealand CAD. Enough said. Can't do anything with that apart from set it up here. So basically, if you get to last week's high, 125 ADR, or the previous week's high at 150 ADR, or last month's high at 175 ADR, sell it. If you get down into ADR today, which is last week's, 3 weeks, or 2 weeks lows, buy it, because all it's doing at the moment is playing the ranges. So just play the ranges until it says I'm not playing the ranges anymore. Play the ranges. So can't do anything with it at the moment, but the sell will go in up here somewhere. You could probably get 2 in. So if you got in at 125 ADR, you could scale in a second at 200 ADR, which is this propulsion gap, triple top high, monthly high. But that would be 3/4 of an ADR between the 2 positions. That's the play, shorting it up there. New Zealand Swiss, very similar actually, New Zealand Swiss. So again, shorting this area here and then shorting up there. If it works out, brilliant. If it doesn't work out, second entry, then try and get out on both of those legs. Downside, you've got, it's a bit close, but ADR today is last week's low. You've got this previous low here, which held, but not great hold. But then it obviously it did pop back up again from these lows. So, you know, this whole area here is where the buyers are sitting. So if you do get down into 125 ADR territory, off you go. If you go up into 150, 175 or above territory, shorts up there. New Zealand US, that's just hit ADR. So we're coming up to retest the double monthly high. It's already bounced 125 ADR. What just caused that big drop on the dollar? Let's just have a quick look, see if there's any news. So French PMIs ever so slightly up, bullish. German PMIs ever so slightly down, bearish. Mixed signal on the euro, basically. So, yeah, that looks good for shorts right now, up here. Nice tight reversal alert going to go in as well, look. So there's your 125 ADR. That's the previous month's high. If you get that reversal alert, that's a good-looking short. If you don't hold the highs, obviously it's a triple top high. So, you know, we're up here again. So this is a double monthly high, which the market just cannot break out of. So probability is at least a pullback of an ADR if we're going to continue the uptrend, isn't it? Looks like a lovely little short there. Upside on it, if that does break that double monthly high, you're coming up into this propulsion gap. Yep. So this low here, we hit it, we broke it, we retested it, we added shorts. So this propulsion gap to the upside is about 300 ADR. So you'd be getting 2 to 3 trades in, maybe 4 possibly on that leg, and then wait for a pullback on that leg to get out. US dollar CAD, obviously that's dropping this morning because we've got a weak dollar. We have just broken that monthly low. So is this the dollar dying completely? We'll have to wait and see. You got this area here, which is your next sort of resistance, which is 150 ADR-ish. Other than that, you're coming back down to retest the lows. You've also got the start of that leg up. So that's your break there. So it's a nice looking long, but again, longing the dollar at the minute it's kind of a hope. It's hopeful. You have to be hopeful if you're going to long the dollar. I've got one on. I'm not taking another. So that's high enough risk for me. That pound US dollar short that I've got on, which is obviously me longing the dollar. So it's a nice looking long, but you know, the dollar is just getting destroyed at the moment. There's nothing he can do to undo what he's done right now. I just can't see a way of strengthening the dollar apart from kicking him out, getting someone in charge that's going to go, sorry about that. Let's start talking some trade, shall we? Because threatening the entire world is not the way to do business. And this is obvious. It should be obvious. It's obvious to everyone in Bloomberg. It's obvious to everyone in Wall Street. It's obvious to everyone in the government. Just not obvious to him for some reason. So unless there's a master plan he hasn't told anyone about, you know, Elon Musk resigned over the weekend. Why? Because he was about to get kicked off the board of Tesla. Why? Because Tesla's stock's gone through the floor. Why? Because Trump screwed up the economy. You know, it's like even people in his own government are turning around and going, I've had enough. Mind you, Musk, government, not sure those two words go together, but anyway. So, yeah, it's a buy here, and it's a lovely 125 propulsion gap bounce back up there. Look, so that's where the move started, where we broke that low. We pushed all the way down, and then we finally got a little bounce on Friday. So that whole area there, really, from that propulsion gap down, is one big, strong move. So some kind of retest, at least of that level, potentially a little bit deeper into it as you pull back, is potentially on the cards. But, you know, with the dollar, as you know, at the moment, you can see we are getting a lot of orphan propulsion gaps on the dollar. Yeah, because there is absolutely no strength in the dollar at the moment. So it's a dicey long, I would say. But it's nicely extended. Yeah, I mean, it's nicely extended there. Bounce. Nicely extended there. Bounce. Yeah, it's still going to bounce. RSI is still going to cause a bounce because you're just going to run out of the other party. When they do, they have to do nothing. There's no other choice. You can't sell if there's no one willing to buy. Yeah, so this is what exhaustion is. We run out of people willing to buy it. If you can't sell it anymore because there's no buyers, you have to get out of some of your position, which entices buyers in so that you can drive the sells back in again. So that's what's happening. There's your RSI extension alert on the US dollar CAD, just literally triggered. So good looking long. but just be aware this thing's in dire straits at the moment. So don't go targeting, that. Be conservative. Try and get out fairly quick. Or if you get a trade on, and you're starting a position trade on this from here, and it gets up into there by the end of the day. There's nothing wrong with sticking a break even on it at the moment, because if you've got no faith in what you're trading, you still need to trade something, and this is still a valid signal or a valid condition. And when you get a reversal alert, that is still going to be a valid signal to go long. Yeah, buyers are stepping in. Market is extended. Nothing wrong with it. But personally, faith in the dollar isn't there. So if this thing suddenly got up to there, I'd be thinking, I'm just going to stick a break even on it. If it comes down and stops me out, fine. It's no risk, is there? And this is the beauty of position trading. There's very little risk in position trading anyway, because if that trade doesn't work out, we're just going to add another one and change our price to a different level, which means that it's going to be even more extended and more likely to bounce. So, this is the great thing about position trading is if you're wrong, you just wait, because you will be right. Just at the minute, the dollar's not my favorite thing to be going along on. US dollar Swiss, same thing. So this is a tricky one because we've got a weak Swiss franc potentially coming this week. We've also got non-farm payroll, and that could also go horribly wrong, couldn't it? So, but we've lost the weekly low and the monthly low there. We are just about extended on US dollar Swiss to the downside. So upside targets, you've got 125 ADR there, nice big strong propulsion gap. Downside, you've got this little propulsion gap. This is just a big buy order that came in. It isn't what broke that high, so it's not particularly great, I don't think, as a propulsion gap. I'd be more inclined to say if it does break down here and it fails, you're probably going to fall down into here. How quickly it goes and whether or not you get a nice bounce on the way down there, you can't tell, can you? So, but there's a lot of news this week on everything. So there's going to be a lot of volatility and a lot of big days going in this week. So there's going to be plenty of ways to take advantage of it either way. If it goes very fast against you, you're going to be getting in another trade. If it goes very fast your way, obviously you get out very quick. So, but yeah, looks technically it's a lovely long. Fundamentally, I'm not as keen, but fundamentals at the moment. We're in this situation at the minute. I was talking to somebody on Discord over the weekend about current market conditions. They came to me with a strategy basically for just trading VIX basically, and it's kind of the last 6 weeks or so. And I said, that looks an amazing strategy, but you're basing it on the last 6 weeks of price action. You've identified that we're in a volatile market, which is great, but this can all change like that. So everything that you look at now from a system strategy basis, which is based on technicals, is going to fail if Trump opens his mouth. Everything you say based on fundamentals, everything you trade based on fundamentals, like strength and weakness of individual currencies, is going to fail when Trump opens his mouth, because he has the power to drive fear and greed at the moment. And that's what drives the market up and down at the end of the day. So you can say, I'm going to drop the interest rates for the next 6 months. If something is said that counters that, it won't happen. So right now, you just have to go with the flow and trade what you see. But you have to decide whether or not you think we're going to have strength in the dollar or not. Because if you're trading something that's got the dollar in it, you have to be prepared for that to happen or that to happen very, very quickly. So you have to get into the market somehow. There's nothing wrong with that as an entry. In fact, it's also a divergent entry as well. So we've just put in a new lower low. Oh, that is now. So I was looking at the RSI there, actually. Not that would have been divergent, but it's not. Still just slightly bearish. But you can see that the price is pushing down. RSI is actually pushing up. It is divergent, look. Yeah, so you've got bullish divergence here as well. The market, I think, really wants to get behind the dollar, but it just can't do it at the minute. So I think one positive one really good positive news event or one really good positive, I've had a fantastic call with President Z. And I think we might get some momentum in it, but I'm just always erring on the side of caution. Just about to stop out on the DAX. That's a good morning, isn't it? Quadruple stop out this morning. Can't do anything with that. It's not going anywhere. Breakout strategies do not work in ranges. On paper, a weak dollar makes the US exports cheaper, so could reduce the trade deficit. Could be, yeah. This is the thing. This economics is 1,000 cogs, and you can spin all the different cogs to make different things happen. But at the end of the day, if you don't tell people what the overall plan is, and I understand why you wouldn't, but if you don't, the market's not going to have any confidence. And upsetting the markets is a hard thing to retrace, because when you get someone come in that is doing what he's doing, and at the end of the day, he's harming the financial stability of bank and institutional movement. So banks, institutions, hedge funds, pension funds, large investment houses, they are all making money out of other people's money. Their purpose is to report back profitable returns. They have systems, strategies, and approaches to making money, which are all unique and all work and have done in a market that's been stable for 60 years. He's ripped that up. So getting the confidence from Wall Street back isn't going to be easy, because he's screwed them. He's basically done stuff which has completely caught offside huge institutions. Yeah, remember what I say about propulsion gaps and gaps in the market and why they work. Yeah, these are inefficiencies in the market. These are imbalances in the market, which institutional traders will drive price back to when they are in trouble. So they position trade in the same way as we do. They average into movement, but they have the ability to move price, which makes their job a lot easier. We sit there and we scale into positions and we have no control. They sit there and scale into positions and know at any point in time they've got 150 million sitting there. They can press the nuke button on and drive the price back to where they need it to go to balance the books. And in that process, they make a load of money using other people's money. That's gone. So, there's a lot of large organizations loving it and hating it, because it's a big money-making opportunity, but instability isn't what you need. When you need to produce regular returns for, let's say, the police hedge fund, pension fund, if you're the investment firm that's running the pension fund for the police in the UK, yeah, you have an obligation to return a result. If you can't do it because you haven't got any stability in any market anymore, you need to look at other vehicles. So they will be diversifying away from anything that is high risk. Stock markets, they will collapse. They will. They have. And this is why. So, I don't see how he's going to get it back. Yeah, it's like telling your best friend you hate them. Yeah, and it's like, I might forgive you, but it's going to be hard. That's where we are. So, dollar, I just can't, I'm the same as I think everybody. You look at the dollar at the minute and you think, well, there's just no reason it should be strong unless he tells us. Yeah, if he comes around, all he's got to do is turn around and go, right, I did all this so that all my mates could make billions. We've made billions now, and what I'm going to do is I'm going to give it all back to the people. And all the trade tariffs we can drop now because I've made enough money to sustain America on my own. Me and Elon and Bezos and whoever else. He's pumped full of cash, which is what he did when he did the let's buy the market now guys move. Yeah. If that's his master plan, good on him. If it's not, I don't know what's going to happen. I agree. Trump also needs to weaken the US economy to have better tariffs. Yeah, I don't know. Short-term weakness for long-term gain is a very well-established play. The Swiss do it quite often. They're very, very rich. So, there's something at foot, isn't there? But whether we can work it out, that's the question. Long US dollar does not look feasible now. Any developments on 007? No, scrapped it. I've moved on. I've just got other strategies I'm working on, other things I'm working on at the moment. Also, can you glance at funded next futures and share thoughts on their terms? Yeah. It's not up to me. What do you think of them? They're just another futures prop firm. Are they as good as FTMO? Are they as good as Top Step? Are they as good as Take Profit Trader? Those are the two biggest companies on the planet. If they're as good as them, great. If not, it's all the same. It's all the same. As long as they are not using trailing drawdown, good. As long as they give you payouts within 24 to 48 hours, good. As long as their targets are the same as all the other prop firms, good. Other than that, use who you like. They're all the same. They're all, like I said, that's your statistic. That's the number of people that get a funded account. Yeah. And out of those, less than 0.25% will ever get paid. So that's the statistic. It doesn't matter which company you use. Obviously, just don't use one with a trailing intraday drawdown if you're using futures, because you will get killed. As long as they've got an end of day drawdown. They do CFDs as well. Their website doesn't seem to be working. That's because I was on the page. See, that's going to get you. You're never going to get paid. You're not going to last 21 days. The market is not going to give you 21 days of consistently profitable trading. You will at some point hit that, or go tilt because you're getting close to it and hit that. Yeah. $449 for $100,000 account. Oh, this is not monthly recurring then? No. Okay. 40% consistency rule means you can't get lucky, which is fair enough. Daily loss limit, soft breach. That's good. But, look, $100,000 account. Yeah. $449. Why can't I just go to Top Step? Their website. $99. Yeah, so you can either pay $99 to get access to $100,000, or you can pay $450 to get access to $100,000. I think I'll go with the largest company on the planet, longest established company on the planet in the industry. No one can beat these guys. If you want to trade futures, Top Step is head and shoulders above every other organization, closely followed by Take Profit Trader. Yeah. Who are the second, in my opinion. Yeah. And this is why minimum days to first withdrawal, 0, right? So when I was funded with these guys, yeah, made a few $100 day one, took it out. It's just like a brokerage account. You draw anytime you like. You can't even do that on Top Step. Top Step will only give you 40% of your profits straight away. You have to wait for the rest of it. This is where they'll get you. These guys don't do that. But they're all different. These guys have got a fee for going pro. So has Top Step. Some of the ones haven't got a fee. They go, we don't charge a fee. No, but you do charge more for the evaluation. Or you don't allow us to draw any money out for 21 days. Or so this is what I mean. I can't advise you whether they're good or not. Do you think they're good? If you think they're good, use them. But I would say the same thing about all prop firms. If you want to make money in this industry, get some capital, because otherwise you're just going to be trading these guys money, and these guys have limits on how they allow you to trade. This account here has gone into $1,600 of drawdown today. Holy crap. If I have a losing afternoon and I go into $4,000 of drawdown, I've blown my account. I haven't, because it's my money. I can do what I like with it. I know that I'm going to trade this back up to 6 or 5 or 4 grand profit in 2 or 3 days' time. But their rules don't allow that to happen, because they know that this is what happens in the real world. You lose, and regularly. So, it's like this account here, this FTMO account is down today. Yeah. Past evaluation those 3 days. Today it's down. But I'll get it back this afternoon. But if that goes to 3.5 grand, it's gone. But if it goes to 3.5 grand on my account, the next day we'll make 4 or 5 grand and get the money back, because it's programmed to do that. The strategy is engineered to recoup loss with a loss recovery system. They don't let loss recovery systems work. They don't let any kind of lot multiplication work. Most of them don't allow dollar cost averaging because it works. They don't allow you to do anything that works. Do they? If they did, they'd have to pay out a hell of a lot of money, and they can't do that because they're making millions out of evaluations. 1 in 1,000 people get paid. Yeah, that means there's 999 people paying $449. Do the maths. If that person that gets paid does not make 490 grand in profit, who's the winner? It's a very good maths equation, and I wish I had one of them. Funny you mentioned divergence. Ever traded them? Yes, but they're a confluence signal, not a strategy. Just let Lee complain. We already made 250 billion in tariffs and just secured the steel industry here with 7,000 new jobs. That's good. Plus Musk saved us 175 billion. Yeah, that's good. Big Les doesn't like me because he's American, and nobody likes Americans at the moment. I give up. Quadruple stop out. Happy summer trading, everyone. Yeah, not yet. Not there yet. Not yet. I don't think any Americans like anybody else at the moment, do they? Because they're all spiraling into death and deficit. So I've got friends in America, and they want to move over here as fast as possible. I can show you. I can tell you. I got a relation that is over at college over there at the moment. Probably not going to be for much longer, because they've just put rules in to say, well, no students. It's just like, why don't you just shut your doors, put a big wall up and go, right, if you're not self-sufficient, you're going to die. And you will become self-sufficient, but you won't become self-sufficient with anything electronic because it's all made in China. Oh, who you put 185% tariffs on? Good idea. But the rest of the world is looking at them and going, what? Anyway, everyone's welcome to their opinion. Obviously not me, because if I say it out in the air, I get told off. I want to know who gave Elon Musk the black eye as well. Would have been a fly on the wall there. I reckon that was Trump. Just past 25k challenge on Friday. Back in the game. Cool. Did you lower your risk on FTMO? Yeah, 0.5%. You can't trade with 1% on prop, basically. So yeah, you can't trade. Well, you can trade 1%, but if you're, depends what type of strategy you're trading. If you're trading 1%, you've got to be aware that if you take a, what am I doing on that chart? Let me just move over to another chart that makes sense. If you're trading 1% here, yeah, so you'd have lost 1%, 2%. If you trade the DAX as well, 3%, 4%. So you're 4% down. You've only got 5% to play with. If you trade with 0.5%, you can stop out in the morning on a rotational market like we have today. And then in the afternoon, you can trade again. But if you use higher risk, obviously you can pass your evaluation in one day in the morning, but you run the risk of blowing the account faster. So it's all relative. But on prop, I wouldn't trade more than 0.5% risk of trade, just because you need to stay in the game longer, because you've got to play the numbers. With prop, it's all about survival. Normal trading strategy will work on all prop firms. You can go and flip a coin on a prop firm and make money. That's absolutely fine. No problem to do that. But you have to get the right sequence of coin flips. So look at that here. Target was 3.5 grand. I made 3.5 grand in 3 days. Job done. Yeah. But that's because those 3 days we had clean breakout after clean breakout after clean breakout. Yeah. If all 3 days for the next 3 days are rotational opens, that is going to be a negative 700 and negative 900 and negative 1500 or something like that. Yeah. So passing prop has got nothing to do with your strategy or your system. It's got to do whether or not you're trading a system or a strategy that matches the market conditions of the day you start the evaluation. So if I start the evaluation on that day and it's a breakout strategy, I pass, I pass, I pass. If I start the evaluation on this day and it's a breakout strategy, I fail and I don't know what's coming next. But if I was trading a mean reversion strategy today, I'd have made 2 lively, successful, profitable trades. But I wasn't. I was trading a breakout. Because there is only 3 types of strategy: breakout, mean reversion, and trend. You pick one of them. You were going to pick normally either a breakout or a mean reversion strategy, because trend is notoriously difficult to make money out of. So if it's a trend day, you'll probably make money on both, maybe. If it's a rotational day, you won't make money on breakouts, but you will on mean reversion. So if you run 2 prop evaluations on separate prop firms, one trading breakouts and one trading mean reversion, probably you're going to win on one of them, aren't you? But you need to get the right number of days in a row with the same type of strategy. So if you go, today is mean reversion, and we do that, you win. If tomorrow is mean reversion, you win. If the next day is breakout, you lose. So you give some of that back. If the day after that is breakout, you lose, and you give more of that back. You're probably back to somewhere around about here. If the next day is mean reversion, you win. Yeah. But what people do is they just press buttons and trade all sorts of strategies, not having a clue what type of market it's going to be. It's only going to be a breakout or a mean reversion, because it only ever does that. This market either goes sideways or it goes. It's a stock index. It's either quiet or it's not. So you just wrap a strategy around price action and wait for the edge to play out. The problem is the prop firms know that you're not likely to get 5 days in a row where you'll get the same market regime, the same market condition. So they set rules, which means that you can't win every day. That makes you frustrated, which makes you system hop, or it makes you over leverage, or it makes you go tilt in some other way. So all they're doing is playing the numbers that know you're not going to survive because you're not very good at controlling your emotion. Or they set risk parameters, which means that eventually you'll have a losing run long enough to blow your account. I won't have that because I trade my own capital. I can't blow the account because I've got lots of space. If I've got a 20 grand account or 30 grand account or 40 grand account and I take a $1,500 drawdown, it's irrelevant. On prop, I'm 2 grand away from blowing right now. That's scary, isn't it? I've got 40 grand, I've got 100 grand worth of capital going there, but you only let me play with 3 of it. You're actually letting me play with a 3 grand account, aren't you? And asking me to give you an 80% return on it. That's really what prop is. It's not real, is it? It's a game. It's a scary game. But it is possible to make money. You know, there's lots of people out there making money. I've made money on it. But I've lost a lot of money on it as well. So, you know, it's horses for courses. I'm up on prop, but I wouldn't say I could survive on it. Too unstable to survive long term. Yeah, you're going to be one of the 99. Like, so 99 out of 100 people. Well, it's less than that. Let's say 2 out of 100 pass. Yeah, which is around about the stat. So you get 2 out of 100 get funded. Yeah, which means that 98% of the time you're sitting unfunded. The 2% of the time that you get funded, you're under so much pressure, and you will not do what you did getting funded usually because it takes too long. So, you know, you adjust your risk down, and then all of a sudden you're not making as much money. The psychology changes completely when you get a funded account. When you start trading a funded account, you are scared to death to lose it because it's taken you so long to get it. It just doesn't work. So it's a mind game. The whole thing's a mind game. Unless you use an EA. Yeah. If you use an EA and don't actually look at it and just let the thing do its thing, you'll pass because the EA hasn't got any emotions. It will just trade. It will trade the strategy. The edge, this EA has an edge. It's proven edge. So what we do is you let the EA trade it and the edge will play out because that's what it's done in the past. Not necessarily going to do it 10 trades in a row. It might lose 10 trades in a row, which will blow the account, but the edge is still there. So you just restart it. Rinse, repeat, rinse, repeat. It's all it is. Trade your own money makes more sense. Or do your first trades on demo. Yeah, you should always trade on demo to start with. Morning, Michael. Let's now watch the DAX go crazy. Yeah, I don't think you're going to find that today. I don't think so. Who knows? Exactly. Low risk, small positions. Yeah. Might have missed the breakout you are running on FTMO. Might have missed it. The breakout you are running on FTMO. What's the size of the account? 70K. Yeah, this is MT4 on the VPS. Yeah. So this is a 70K. In my humble opinion, don't touch prop, trade your own money if you want to make a living. Yeah, if you want to make a living. But there's nothing wrong with gambling, you know. I've always said this. There's nothing wrong with... There's a lot of people that hobby trade, and that's absolutely fine. If you want to do this as a hobby or do this as a kind of interest or a part-time income, absolutely nothing wrong with it. You know, but it's restrictive prop. That's the trouble. You know, it's the whole thing with the FTMO. A lot of people don't know the rules of payouts and things with FTMO and Top Step and all these other firms out there. They don't understand the way that they make their money. You know, you get funded and you're like, I finally got funded. I've done this 7 times now and I finally got funded. And you suddenly get 4 days in and you've made $3,000 and you're like, excellent, I'm going to get paid in 3 days time. And so you get to that 3 days, you press the button and it goes, you can have 40%. You're like, what do you mean I can have 40%? You can have 40% until you reach a certain target or you've traded for 90 days. So I can't actually get my money. No. Oh, so I've got to make more money to actually get what I wanted to get my money back, which means I've got to over leverage. You over leverage, you blow the account, you start again. Mind. The rules are all there to screw with you, not, you know, they know the markets are going to screw you at some point because the markets always do, but they know how to psychologically screw you as well. You've got to shut off to that. It's very difficult. This is where most people struggle. I struggle with it as well. You know, it's just one of those things. You've got to see it as it's a level above casino because you can create an edge. In a casino, you can't create an edge. You can create an edge in trading and you've got to get that lucky run. That's what you need. If you'd have shorted the week before Trump, obviously you can't do it on futures, but if you'd have shorted on a CFD account the week before Trump on a funded account and gone on holiday for a week, you'd come back to an absolute fortune payout, wouldn't you? But that's not trading, that's luck. My humble opinion, don't touch... I've already answered that one. I don't trade every day, show a little patience, wait for my setups to happen. Yeah. Don't like dancing on the razor. No, why would I like dancing on razors? I practiced for months on demo under prop rules. Yeah. Yeah, no, and this is the other thing I've said to people plenty of times. It should be something everybody says, but if you're going to do this, right, rather than going here and pressing this button, yeah, and paying $99 a month to have a demo account, why not get a demo account from your broker for free? Set up the rules, yeah. So say I've got to hit that and I can't lose that, and just do it yourself on a demo account. Don't pay for one. All you're doing here with this company is you are paying $449 to get a 100K demo account, which you can set up with your broker anytime you like. And they are setting you a game where you've got to hit that without hitting that. Yeah, that's the game, right? Just go and download that from your broker. Yeah, set up a demo account with your broker. Don't pay the $449, but challenge yourself to do this. At the end of it, you're not going to come out with 100 grand funding. You're not going to come out with 100 grand funding here either, because they don't give you any funding. What they're going to give you is another demo account and tell you it's got funding, or tell you it hasn't got funding, but if you're good, we will pay you a percentage of it, and then we might move you up to the big leagues and give you a proper account at some point in the future. But we know you won't do that, because 0.25% of people that get a funded account get paid. So set yourself up 2 demo accounts, and if you can survive and make 12 grand on them without making a 6 grand drawdown, then pay them $449. At least you've done that 15 times and proved to yourself you can't do it before you hemorrhage over 5 or 7 grand trying. Pointless. Yeah. It's a demo account. Just go and get one from your broker. If you go into your terminal and go to accounts, new, yeah, open new demo account, you can do it within your terminal, and instantly there's 100 grand there. You don't even have to log into your broker account on the website. You can do it from your terminal. But it's the promise, isn't it? It's the promise of the millions. That's what we want. That's what everyone's after. Why are we here learning from Lee? I'm here because I want to manage my emotions in trading and make my main source of income. Gambling is evil. Yeah. Yeah, it is evil, but it's also, don't get me wrong, this is gambling. This is definitely gambling. You are flipping a coin, but you have an edge you can create around it. That's the difference. It's a massive difference, trading and gambling. Yeah, all these, it's mostly South African websites and signal services, and there's so many scams out of the South African market, basically. But all they do is they show you a chart with tons and tons and tons of trades, and the market collapsing with all those trades on, and a huge money. Yeah, and they make huge money on these trades. But what they do is they blow account after account after account, and then they make a massive one. And they do, I think, make money out of these things sometimes. But it's not trading, is it? You can do the same thing in a casino. You can walk into a casino, you can put money on black 10 times in a row and lose. And every time you just double it. And eventually one of those will come in black and you'll make a load of money. And then you just show everyone how good you are at playing blackjack on that one instance. That's what most of it's about. But it doesn't make money long term. It's gambling. This strategy is not gambling because it's stopped. Yeah, we've stopped gambling now, which means we are controlling our risk, which means we are trading. We're not getting cross and hitting the buy button now. It's broken long again. Right, screw you. You owe me 4 trades. I'm going long. That's gambling. That's what most people do, isn't it? Right, I'm going to keep going until I make money. And that's what prop relies on you doing, is hitting this button over and over again, making sure you hit that 3.5 grand drawdown, because then you're going to spend another 450 quid on a demo account. Nuts. So this is almost like gambling, but with more freedom. Yeah. This is maths, basically. Trading is maths, isn't it? At the end of the day, all you're doing is you're applying a historical formula of price movement and mathematics around future movement. That's it. That's all you do. So, that breakout short there was Trump. Yeah. That isn't a strategy. That is just going to be lucky if you take that short. But at the end of the day, it is a breakout, isn't it? Yeah. So you hit the short button, you apply that, and you apply a larger reward to it than that. And if that happens more than 40% of the time, you're going to make a load of money. And it happens over and over and over and over and over and over again. Yeah. And like every time it gets extended up there, it pulls back. Yeah. So it's a repeating cycle of movement that we can apply mathematical edges to. That's a trading strategy. It's all a trading strategy is. It's all the banks and institutions are doing, although they can move the price, which is their edges. They can move the price wherever they want it to at some point, not necessarily when they want it to, but they can move it when they need to. We don't have that, but what we can see is what they've done. So, you know, the footprints of the market are your indicators. They are the repeating processes that institutional movement makes. That's all you've got to do is you've got to identify the statistics and the equations that make movement up and apply a mathematical risk-reward ratio around that movement. That's what trading is. When you go into a casino and you put any money down on that roulette table, there is a big little green one at the end there that's going to get you at some point, and that is their edge. Every time that green one comes up, their edge plays out. Their edge will always clear any losses they've ever made. And more. Blackjack, it's got an edge. Every casino game has got an edge. This is a 50-50 with the ability to adjust risk. That's the difference. Whenever you go into a casino, if you go on red or black, it's the 50-50. Yeah. If you go on the first third, second third, and third third, it's not a 50-50 anymore. Yeah. It's a 33%, but they don't give you the same risk-reward ratio. You get a higher reward ratio, but you only win 33%, which means they win 66% of the time. Edge. It's all about edge. The pit boss to pull you off talk. US dollar CAD gave me a 5-minute reversal. Yeah, so that's down the lows, isn't it? So yeah, there you go. So look for a bounce out of there. It's the first move of the week. Could well just be a fake. Yeah, that looks good out of that monthly low. I'm short pound US dollar, so I'd expect this to be doing very much the same thing. So I haven't quite had the reversal on the pound US yet. I am in new trade on that off the highs. Oops. Sorry, 125 ADR, that isn't it? So yeah. So you think, yes, some US dollar strength. You know, we're talking about US dollar strength, but is it coming? Big Les says no. No, Big Les says yes. I entered US dollar CAD targeting 125 ADR with propulsion candle as confluence. Targeting 125 ADR. So down here. If this is the start of, sorry, that's the wrong one. US dollar CAD you're targeting, aren't you? Yeah, yeah. So there you go. Perfect. So that's Thursday's low. That's the propulsion move that broke Thursday's low. So yeah. Measure it with a fib. You know, whenever you're targeting anything, always try and get as much confluence as you possibly can. Yeah. 50% retracement. Where's that lie? Just below 125 ADR. Bang in the middle of that propulsion gap, which was the sell order that broke that low. Loads of reasons it will get there. Loads. But, you know, it could also flag and break. Or it could just do a 38 retracement. Or, you know, and you can talk yourself into and out of anything you like. Yeah, if it does a 61.8 retracement on the Friday, Monday leg, that is also the same place. But it might only do a 38 retracement on the Friday, Monday leg and get to there. Or somewhere between 38 and 50 and get to there. No idea. It's going. If it goes up, it's going to go up to one of those levels, isn't it? And it will break one of them and it will come back. You know, if we look at this afternoon, it's probably going to be either here or up here. But it might equally have completely collapsed. Who knows? Plan. Just plan it. Yeah, and plan your backup. So your backup trade on this, if you've got into that now and this is a position trade, you've got to go out a fair way. So you've got 3/4 of an ADR is going to be 60. That's 3/4 of an ADR. So if you're planning this as a position trade, I mean, this would mean that you would be taking every single one at exactly 3/4 of an ADR, which you probably wouldn't. So first entry, second, third, fourth, fifth. So you'd be in 5 trades. If it was to collapse right now like that, you'd be in 5 trades by the time you got down to that bounce point. You're already extended on the 4-hour RSI below the 20 level, and that thing would have to retrace that entire move back up to retest that. That's your plan to the downside if the downside goes. Oh, just hit a buy stop. So, morning, Eri. Thoughts on New Zealand dollar Swiss? I've already covered that. Sideways, middle, going nowhere. You can't do anything with it. So either buy the lows when we get down here or sell the highs up there. Possibly even there. But just wait for it to get somewhere first. It's not gone anywhere. It's stuck in the middle. Swiss franc is potentially going to weaken this week on the inflation numbers. So I think there's more chance of getting into a short this week. But at the minute, it's just stuck. There was a long opportunity on Friday, but not great. I'd be looking at either of those. Thinking of taking long despite no extensions? Yeah, do it. I mean, at the minute, you can't rely on any type of extension because we're just not getting them. You know, there's just, while the market's doing this, you just got to get in other ways. Yeah, this is why I'm running my account the way I'm running my account at the moment. I am taking RSI extensions, but I need to just get in. You can't wait for a system to achieve extensions when it's not moving. Yeah, it's not going to get extended to the normal extensions we get to. So anything that gets above ADR is worth a look at. Anything that gets to any resistance or support is worth a look at. But I would only really want to get in if something has gone somewhere, i.e. gone beyond ADR and is close to a resistance. So if this thing was to, for example, fly up into 125 ADR, I would get an alert at 125 ADR and be thinking, okay, there's a weekly high and there's another weekly high within half an ADR. So we know there's a load of sellers here. I'll get in here and see what happens. It's either going to do it or it's not. If it doesn't, I'll get in later. But if it does, great. But I'm not going to take a trade here because that's the low, that's the high, and that's where I am. It's a 50-50 shot of it going up or down. At least when I get up to here, there's more chance of these guys helping my trade work than sitting here and going, well, I don't know who's in charge at the moment. So, you know, these sellers at the moment are in charge, and other people are going to be going, no, these buyers are in charge. So if you're sitting between a batch of buyers and sellers, there's no advantage, there's no edge. When you get to the edge, you've got the last batch of guys potentially protecting their position, helping drive the market back in that direction. When you get to here, you've got the guys that are selling here wanting to stay short. So buying or selling here gives you no tactical advantage at all. It just gives you a 50-50 shot. And again, there's nothing wrong with a 50-50 shot as long as you've got a plan. So if you long it here and say, I'm going to trade it up into that high and it drops, you're going to take a second entry here. And you're going to average your price to there. And you're going to wait for that to either bounce back up and get out, or you're going to wait for it to come down and test that monthly low. You wouldn't have 3 positions on by there. You could do. You'd have to be in half an ADR apart, which is a bit tight, but you could have a third on there, and then get out on that leg there, which would be kind of that sort of size. You know, there's nothing wrong with taking a trade for any reason. This is why I developed the Position Trader EA. You can press this button right now. Absolutely nothing wrong with pressing that button. I don't know where it's going. You don't know where it's going. The market at the moment certainly doesn't know where it's going. So why not just press the button? Doesn't hurt, does it? This propulsion gap here could well hold. Or it could fail and that one will hold. Or it could fail and come and test a low. Or it could push straight up into there and you'd be 100% right, in which case you'll get half an ADR of movement. But don't expect to get an ADR out of it, because it would have to break that high. One of those is going to happen, isn't it? You know, this is the thing. You don't let anybody tell you that their system or strategy or their way of trading is better than anybody else's. I have no clue which way anything's going. No one does. What you can do is say, I think, and that's it. Best you can hope for is a hope. This thing, you know, this is all you've got. Everything you look at, every market you look at, all these gold traders, everyone trades gold because they think it's the best thing on the planet to trade. It still moves up and down. Yeah, it's still going nowhere. Where are you? Bang in the middle of a range. Where's it going next? I don't know. Where's the dollar going? If the dollar goes down, it's going up. If the dollar goes up, it's going down. That's basically all I know. I don't know where the dollar's going, so I cannot predict the future. I do know we're up at a high. So that's not a bad level. Yeah. We've got this lovely propulsion move to the downside, which they added to twice. Good short. Very good short. But if it's not going to happen, I'm going to come up to there. So I'll plan my trade entry to there, assuming that I'll be able to get out on a pullback from that level because they'll be extended, exhausted, and way above there. And what happens when they get way above there? It comes down. All you can do, look at the past. But, you know, it's illogical to trade in the middle of a range. It's logical to trade at extremes. So either you are using an indicator for that or you're using a level to decide it. You know, pivot points, anything that measures distance and speed is going to work sometimes. It's not about which one you use. It's about what happens after and how you manage the trade after. That's what makes you the money. When you get in, you always have a 50-50 shot. So yeah, nothing wrong with that trade at all. I wouldn't take it, but that's just because that's not what I do. If I took this now, it will be right or wrong, but I will have a plan to get out of it. As long as you've got a plan, you'll be fine. After spending over 5 years trading forex, I've recently shifted to futures trading, and I find it incredibly appealing. Go for it. You need to change your name then, Eri Forex. You've got the wrong name. You need to change your name to Eri Futures. Yeah, do it. That's what I trade futures. It's all the same though. I mean, this is futures. It's not. It's CFDs, but it's the same thing. This moves exactly the same as the futures market. You put a futures chart next to this, it's the same. Price is different, but the price action is exactly the same. The only reason I don't trade futures is because I can't hold overnight if I need to, because it's too expensive. And you are stuck on risk. So you can only trade single contracts. Therefore, you cannot control your risk to a micro level as you can here. And obviously, you can't hedge. And the other trouble with futures, from my perspective, is if I'm going to scale into a position, the FIFO rule screws it because you can't take off any other position than the first, than the last one you added. So it's more restrictive. But if it appeals to you and it works for you, do it. Doesn't matter what you trade, does it? You could trade cow dung futures or cow dung CFDs if they had it. Yeah, if it moves up and down, it's a candlestick. That's all you need. It doesn't matter what the market is. If you're good at a market, trade it. If you put statistics in to a trade analysis tool and it says you lose every time you do this, stop doing that and you'll suddenly start making money. Keen to hear what's the difference. I think I just explained that, but Eri can explain to you if you want to. Discuss it in Discord. Right, I'm going to leave it there. I'll be back this afternoon at 2:30, and we will trade the indices, see how we get on with the afternoon session. Obviously, this morning's just been death. So, yeah, we'll see how we get on this afternoon. Hopefully, we get some more movement, but these markets this morning are just, not going anywhere. So, you can't trade much on this today. So, hopefully, this afternoon we'll get some decent movement. So, news-wise, just be aware. Today we've got the PMIs coming out half an hour after market open, so there's a good chance we might have quite a tight open today while the market waits for the PMI numbers, and then when the PMI numbers come out it will take off. So we'll see if we get any movement prior to PMIs, but it might be a little bit of a choppy open on the US as well, so we just need to bear that in mind. It could be one of those days basically, but we'll see. But yeah, that's all we got today. So you got your Swiss GDP, which we've obviously already had, and then PMIs are after I'm back this afternoon. All right, so have a good day. Anything you need, let me know. Oh, sorry. What do you think about Aussie US with meeting minutes tomorrow? Don't know. I don't know what the meeting minutes are going to be. So there's no reason to get into the Aussie US at the moment, I don't think. If it pushes up a bit more today, be a nice short. So watch that area there, 125 ADR. So if you can get up here, I'd be looking at shorting it. And I will actually look at shorting that today. If we get an extension on RSI and we get an ADR extension, obviously you need to get an ADR extension to get an RSI extension. But if we got up to there, I'd short that because it's range bound. So yeah, shorting up here. But I mean, it's no point in thinking, I don't know what the Aussie meeting minutes are going to do. It's not, they don't really do an awful lot. It's an orange news event. So unless there's something untoward in there, if there's something crazy in there, then yeah, it will move. But which way will it move? So, if you take a trade short on it today and the meeting minutes are all, I'm going to raise the interest rates, that thing's flying up, isn't it? Can't really, you can't really use news to predict the future. You've got to wait till the news comes out. You're long in drawdown at the moment and a bit overexposed. How can you be long in drawdown? Aussie US, did you say? Am I looking at the wrong pair? No, Aussie US. How can you be long and in drawdown on that? Even if you'd have bought it there and scaled in, you're at break even. You got in at the top. Okay. I mean, that move there is 129. It's 58 ADR. So that's only 2 ADR. So worst case scenario on that, you should have a maximum of 4 trades on and be at break even. If you got, you'd find it hard to be in any drawdown on that. If you bought it there and you spaced, let's do this as an example, as a worst case scenario. Let's say you bought the top and you spaced your trades half an ADR apart, which is 30. Yeah. I mean, you haven't got 4 on. So if you bought it there and you had pending orders placed exactly, I know you would have 4 on, exactly at half an ADR, which is tight. Let's say you did get that on as well. Your average price is there. So if you only got these 4 on, your average price is there. You only scaled it with 1 additional trade doing it manually. Well, it depends where your additional trade is then, doesn't it? So if you got in there and you got in there, Yeah, I mean, you've screwed it, haven't you? Because you should have been scaling in. If you haven't been scaling in, you haven't got the position trader EA, have you? Because the EA would have got you in. Yeah, you screwed it up. Yeah, you screwed it up. I mean, if it doesn't matter really, does it? So what basically, if you've, I've done this before when I was trading manually. You know, you miss opportunities and you get in wrong. So if you're in here and you're in here and you bought the breakout and it hasn't worked out and you've got in there, your average is there. Yeah. You've basically missed an entry or two, which is fine. It's sat around for days and now it's pushing up. Okay. So one or two things is going to happen from here. It's either going to go that way on the news or it's not. So from here on, if it goes up, you win. If it goes down, where's your next trade? Plan your next trade. Yeah. Stick one in there and then have one down here at the double bottom, triple bottom, propulsion move with backup weekly support in a propulsion gap, which they continuously bought before the monthly lows. Yeah. That's your backup, isn't it? So if your average price is somewhere up here, I would personally be going, right, there's my average. It's a quarter of an ADR, half an ADR away or whatever it is. If it pushes down into there, I'll add another one. That tightens my average up for me. I will then maybe buy one at the lows here or wait until it gets to that weekly low. And if that doesn't happen, I'll plan there. If you want to, if you're not using the position trader EA, yeah, measure half an ADR. Oh, depends what you want to use as spacing. I would recommend 3/4 of an ADR. Yeah, so that's half an ADR, 29. Yeah, 3/4 of an ADR is going to be 45, something like that. Yeah. So let's say your last trade was here, maybe. Yeah. Place a pending order there. So stick a physical pending order in. Yep. So right click, trade, buy limit. There. There's a buy limit. Right. Then stick another buy limit there. Yeah. And then stick another buy limit close enough to that low. Yeah. There's your plan. So if you now don't look at this anymore, that's going to trigger. That's what I would do. And if it comes all the way down to range low and bounces off, you'll just get out when it bounces. I don't yet. I'll buy it. Yeah, I would get the position trader EA because this is the whole reason I built the EA. It does everything for you. You cannot get in too tight. You cannot get in without bulls or bears being on your side. You cannot get in without a signal. You cannot screw it up. The EA does everything for you. You don't have to do anything. Don't hate me, but I'm already in 15% drawdown. I don't hate you, but that's a lot. That's a massive amount. You've got in way too much risk. Your initial risk on that trade, this is not a position trade, obviously. Your initial risk on that trade should mean that when the price moves 1 ADR, let's measure it. This is why size is so important. If you bought that, that's an ADR 58. Yeah. That's an ADR. So let's say you got in there let's say you got in where my sell order is. I probably took the other side of your order, right? That's my sell order. You got in there. I got out here. Your initial trade there, the lot size of that trade means by the time price moves all the way down to here, at that point, you should be in no more than 0.2 to 0.5% of risk. So your drawdown here after that entire day's movement shouldn't be more than 0.5%. And that's aggressive. That's conservative. Anything in between is average. I get in with 0.2 at the moment because I'm super conservative because Trump's a lunatic. If I get in at 0.25 normally, that's normal for me. Yeah. But by the time it's done that, I'm in 0.5% of drawdown. You should be in no more than 0.5%. By the time it moves to here, yeah, go away. That's US dollar CAD H4 alert just gone off. So there, 0.5% of drawdown. By the time it gets all the way to there, that initial trade is in 1% of drawdown. This second entry that I took here, an ADR away, because I'm being super conservative, that is in 0.5% of drawdown. So my total drawdown here is 1.5%. If you're in 15% drawdown there, you're 10 times leveraged. No, you're not. You're 20 times the leverage you should have. 20 times. Because you shouldn't be in more than 1.5% of drawdown by the time it's done there. You're trading the sort of risk you would trade with a stop loss. In fact, you're trading, I don't know. I don't know any system or strategy on the planet that would ever recommend. Some systems out there recommend using 2% risk. That is suicide for me, as far as I'm concerned. I've tried all these systems out there that are these super high risk. You blow your account always. You'll get margin called always. So that's too much, way too much risk. So 1%. But that's a conservative approach. Most people would be using 3/4 of an ADR, which is going to be about 60, 30, 45 in this case, about that. Yeah. So that is what most people would tend to use and what I use. Yeah. So that entire range down to the last monthly low, yeah? From there to there is 4 trades maximum. And it's the maximum. I mean, you're not going to get that spacing because position trading, we're not grid traders. We don't get in at price points. We get in on price action. Yeah, when there's a reverse alert, when there's a moving average cross, when there's a 3-bar reversal pattern in our direction, we get in. So if that's your first entry, 3/4 of an ADR is your second. If it got in, you would have got in on that candle, possibly. Here, you'd have got in maybe on that candle or somewhere around here. There, you haven't had an entry because price hasn't got there. So that move there, that position, you'd be, let's say, probably 0.5% in drawdown, 0.75% in drawdown, but your average price is here. Go and watch the Bootcamp again if you haven't watched it already. Yeah. Risk, basically, if you put a trade on and the price goes against you for 2 days by 2 ADR and you're worried in any way, shape or form, you've got too much risk. Okay, so I'm sitting here at the moment in pound US dollar, having been sitting in the pound US dollar for since the 12th of May. And I've got 1, 2, 3, 4, 5 positions on. Yeah. At the moment, my drawdown is 1.7%. I couldn't give a monkey's. It's irrelevant. It's $900 of drawdown. I've made $2,000, just over $2,000 in the last 4 weeks. Doesn't bother me. Yeah, because it's not about making money. It's about not losing money. That's the whole point of position trading. If I got in with 1% risk here, the account would have gone. I probably would have blown the account by now. How much ADR have we moved? So 85, we've moved 370. So 85, let's call it 90. So that's 180, 270, 350, 60, whatever. So that's moved 4 ADR. So that initial position would be 4%. That one would probably be 3%. That would be somewhere around about 2. So 4, 5, 6, 7, 8, 9. Probably at this stage, if I'd have got in with 1% risk there, I'd be in roughly 10% drawdown on this. So even that, it's not the end of the world, is it? After nearly a month with 4 trades on or 5 trades on, I'll be in roughly 10% drawdown if I risked 1% on it, which is massive. But I'm not. I'm in 2% because my job is to survive. It's not to make huge amounts of money in a very short period of time. There's other strategies using stop losses that will do that for you. like the ORB. This will make good high returns because it risks high amounts, but it's because it's got an edge which has a consistent strike rate based on movement. This position trading is a totally different approach. This is investment trading or long-term swing trading. This is what banks, institutions, hedge funds, pension funds are doing. They are moving in and out of swings in the market. They are always in, and they are waiting for movement to extract cash, extract capital. What they call alpha extraction. But it's not, you can't get in with that much risk. You want, there's lots of hybrids of this type of thing out there as well. So there's some strategies out there that will have a maximum number of trades. And the position trader EA can execute all of this. The position trader EA does everything, basically. If you want to trade a hybrid with it, it will do everything. The settings in here allow you to trade no more than a set number of trades, no more than a maximum drawdown. It can get out and close trades at a percentage of when they get into percentage drawdowns. It can do absolutely anything you could possibly want to do with multiple position management. But never get in with a big risk at the beginning, because if you're not using a stop loss and this thing pumps like that, yeah, you will be dead instantly. And it will pump like that. I mean, admittedly, it doesn't pump like that very often. Yeah, this is, Trump, COVID. 2 instances in the last decade I can think of where this has happened. Yeah, so that movement, no. This type of movement, where we're moving 3 or 4 ADR over a period of weeks, like that, all the way up to there, that happens regularly. So you need to be able to survive that. Which means using small risk, which means small reward, but it doesn't mean losing money every day, which is what 99% of traders do. You can either, there's 2 types of traders, is the way I see it. Yeah, you've got the Red Bull racers who are doing this. They're scalping 1-minute charts, tick charts. 5-minute charts is a bit slow for them, and they're in and out, and they're using huge risk, and they're getting big rewards, and they can control their psychology, and they've got an edge, they've got a plan, they stick to it, and they don't go till. There's about 10 of them I know, and I've ever met in my entire life. Yeah. And then there's everyone else that loses money. This suits everyone else because you are not needing to be accurate. You do not need to be in and out the market today. You just get in and you wait for the market to move, because the market just does this. It either does that, it does that, or it does that. Yeah. This strategy suits all conditions. 90% of the time. There are times where it doesn't work, when market gets into a squeeze, like on the US dollar yen. Yeah. But they are rare. They are rare instruments. They are things that cause this, that you cannot do anything about, and you will lose. And when you lose like this, you tend to lose somewhere around about 10% of your account. But all the other times, the other 90% of the time, you're just making 5, 10, 15% a month regularly. But you're going to get hit by these. Yeah, this type of movement, this is an intervention, but that type of movement happens every now and again. But every time the market pushes one way, it pulls. Yeah, this is an extreme move. No one survived. I didn't survive this. I took was it 11%? I can't remember. Some people in the live room will tell me, but something like a 9% loss on. There's this one, wasn't it? I think that move there. I took about a 9% loss on it. Then I made an 11% win. Got it all back. Relative. So it's just, but risk is the main thing with position trading. The 3 rules are risk. Your initial risk has got to be absolutely tiny. Well, there's only really 2 main rules, but spacing is the second one, and the third one is really exposure. But you can forget the third one, the exposure rule, and just reduce that risk even more. So you take very, very small risk. You keep your spacing far apart, and you do not overexpose yourself to one currency more than 2 or 3 times maximum. Yeah, as long as you're following those rules, the market will just keep moving And all you do is you wait for areas of your P&L to become green, and then you close them out. Yeah, so I can press that button right now and move that 90 up there. And then I'll wait for it to come back down so I can add that on again and take it again if I need to. But if not, that will come into profit and that. And I can close those two out at break even if I want to, having made that. But I don't know which way the market's going. So I just need to be in it. But I want to be in it at a time where I think there's higher chance of it moving my way, which is where the system comes in. And I use the RSI. But you could use absolutely any indicator under the planet. On the planet. Yeah, my strategy is not right. My strategy is not wrong. My strategy is my strategy. You can use exactly the same principles that I use and use a CCI indicator, and you have the same strategy as me, just different. Your strategy is scaling in and out of the market. You just happen to use a different indicator as your signal, or your condition. Doesn't matter which one you use. They all oscillate. There's a bank of oscillators. If you go and look at the indicators under oscillators. There's hundreds of them. Pick one. They all oscillate. When it oscillates up, you sell it. When it oscillates down, you buy it. Doesn't matter which one you use. It means the market's gone up. So when it's gone up, I sell it. Well, that's my only rule. I don't buy the market when it's going up. I don't sell the market when it's going down because it's gone. I've missed it. Your job is to anticipate, not to well, that's not strictly true, is it? But I mean, because breakout strategy, your job is to go with the market. It's not to anticipate, it's to go with the flow. Mean reversion, your job is to anticipate the next mean reversion. So this thing has come down like that and hasn't gone back up yet. So it's going to go back up at some point. Where's it going to go to? Probably there. That's what I'm anticipating. So I anticipate and plan for that. If that doesn't work out, I have a backup plan, which will go to there. Because my average price, when I take that trade there and that trade there, will become here. So what I do is I wait for it to get to there. So that was my initial target. If that doesn't work out, I'll change my target to the next area they're going to. This is what these are. These are areas of price where price is going to head, because that is the areas of inefficiencies and imbalances in the market that the market needs to correct. That needs correcting. That needed 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 correcting. Not making it up. This is all it does. You just need to extract money when it does it. That's all it is. Makes it sound really simple, but it is simple. Everybody tries to overcomplicate it. Somebody sent me I'm waffling now because I should have gone. But somebody sent me a strategy over the weekend, and it had, I don't know how many indicators in it. It's like 6 indicators needed to line up for this thing to work. And I just sent them an email back saying, I can't program that for you. It's too complicated. But that's why it works. No, that's why it won't work, because it's too complicated. Yeah. If all 6 of those things have got to line up, it's like waiting for the planets to align before you get a signal. It only happens every 30, 40 years, 100 years. I don't know. How often do the planets align? Not very often, do they? But waiting for all that to happen, you've got to have exactly the right thing happen. Do you know what the odds are? 50%. It's either going up or down as soon as those things align. So just pick one of them, because all oscillators tell you the same thing. If you're matching a CCI with a MACD and an RSI and you're waiting for all 3 of those to become extended, guess what? They're all going to happen at the same time, because they tell you that price has gone up or down. If price goes down, they're all going to go down. If price goes up, they're all going to go up. You need one oscillator. That's it. They tell you the same thing. It's gone up. It's gone down. Too complicated. I've been there though. I have had a million of indicators on my chart, and they all tell me different things as far as I'm concerned, but they don't. It's the same as the multi-time frame ones, where you get these. I built one called multi-time frame stochastics, and it's got 4 different time frames of stochastics on one indicator. So when all 4 stochastics get overbought or oversold, you buy it or you sell it. Guess what? For that one at the end to become oversold, all of the other 3 have to have become oversold to get there, because otherwise that one can't get there, can it? So if the hourly needs to get extended, it has to have gone down on the 15-minute, the 5-minute, and the 1-minute. Otherwise, we can't get down there on the hourly. So why not just use the hourly? I built an indicator to prove to myself that it was absolutely pointless. But we have to go through the cycle. You have to teach yourself these things. Possible double tariffs on steel on Wednesday. Oh, goody. Yep. Oh, no, that's the news over the weekend, wasn't it? UK PMIs 46 up, bullish pound. Not what I want to hear. I'm short. More bullish movement on the pound. Yeah, so the steel tariffs, again, yeah, I mean, that, you know, you're creating 7,000 jobs. How many jobless you got? We'll find out on Friday. Yeah, you know, if you create 7,000 jobs in steel, what are you going to do with the other 123,000? And that's, you know, it's flying the ointment or flying the ocean, dropping the ocean, anything. But yeah, that is going to affect the dollar. If that happens, all tariffs are going to affect the dollar. All tariffs are going to affect everything. So yeah, be aware of obviously that and President Xi call this week. That's what's mainly going to move the markets. And obviously we've got non-farm payroll. So there's a hell of a lot of movement this week expected. But that's what we want, isn't it? Yeah. If we sit around sideways all the time, we don't make money. So I'm all for Trump. Don't get me wrong. I'm not particularly a fan of the guy, but what he does to the market, brilliant. As long as he's moving it, that's what we need. If we can't go up and down, we can't make money. Right, I'll leave it there. I'll be back this afternoon at 2:30. We'll trade the US session, see how we get on. There's nothing much happening else. We've got a few extensions coming in, but we know what they are. So, yeah, there's a few opportunities there. And we'll see if we can recoup our losses from the indices this afternoon. Have a good day. Mumo, you are number 1. Congratulations. You were number 3, but you've obviously spoken a bit more. So well done. I will be back this afternoon. Anything you need, I'll be in Discord or Telegram. Other than that, I'll see you then. Have a good day.